What's up, everyone? Welcome to another weekly review. This is going to be, I guess, the second video in a series of reviews that focus on my plan and the incremental changes that I'm making in the last month leading up to the challenge. So in this video, I'm just going to take you through roughly the performance for the week, how those trades met the plan or not. There's one in particular that I'll go through, and then this is the current plan that I was trading the week. You can see original, and then after doing my weekly advanced self review, I've then revised the plan slightly, and then I'll take you through that briefly. So each week, I'll take you through the trades that I took in that plan, and then how those trades did, and then obviously based on what I've learned in the week, because I'm still doing ICT's mentorship, how then the plan will be tweaked slightly. But 2 weeks before the start of the challenge, I'll probably let that plan run for that last 2 weeks just to get a bit more data out of it, and then do one final revision before the challenge actually starts. So yeah, I'm not going to spend too much time discussing things that I've discussed in the previous videos, such as this plan. I'm not going to go into detail on it. So I'm going to mention where one trade didn't meet the plan. If you're not sure what the plan was, look at a previous video, because I'm not trying to spend a lot of time bringing you guys up to speed on that. The video was released, so yeah, you guys can check that out if you're not too sure, if I'm not giving context to certain things. So 3 trades taken this week, 1 win, 2 losses. The win, all trades taken on quarter risk, 0.25%. And so yeah, the win was a 2R, and then the losses were full, quarter risk losses. So essentially then break even for the week. The one trade, my last trade, USD didn't quite meet the plan. You can see on the daily, we met equilibrium premium. On the 4 hour, that's kind of where the mistake came. Price had broken structure higher, but not yet confirmed the trend, but it impulsed just high enough to for me to project a fib. And that's where I kind of really deviated from the plan. This was the 4 hour chart. You can see price trending lower. I had my fib projected on that large swing, but then we ran this liquidity, impulsed higher, and technically broke the structure to the upside. But because we hadn't yet broken this new high that had formed back to the upside, the trend wasn't established yet. But yeah, I guess I'd logged it because of FOMO, and just wanting to be in a position. I then projected the fib on this initial swing. Yeah, and then price obviously came down into that region. I took the position, and then yeah, it ultimately stopped me out. Met the criteria on this lower time frame, but it did not meet the characteristics of the criteria of the plan, at least. So yeah, one trade that I wouldn't take again. I wasn't 100% sure of this trade at the time. And so that's something I've just made note of. So if I'm unsure whether the trade truly meets the plan and it's kind of on the fence, I shouldn't take the position. So not a terrible week in terms of results, but a lot of information that I've gathered from reviewing that, as well as then back testing the previous week, because obviously I've learned a few things, and I just wanted to see where I could revise the plan. So what I did was essentially back test all 3 pairs that I trade and identify what opportunities were present, as per the opportunities that met my plan, but opportunities as well that didn't meet my plan. And what I found was there were a lot of setups in the week, and most of them didn't meet my plan. So what I then looked for were recurring themes in the trades that didn't meet my plan to then guide me in how I should revise my plan so that it's not as restrictive. Um, yeah, to then obviously be able to capitalize on more setups, and that's basically been the basis of how I've revised my plan. So just some of those observations. I think the key observations that came out were mainly on the 4 hour and 1 hour. Um, on the daily, on all the trades, actually, price had mitigated equilibrium premium or discount. So sort of balanced outcome. Also, whether price was in an order block or not. If you watch the back testing session, I focused a lot on trading out of order blocks, both 4 hours and 1 hours, but nothing too crazy there. Data suggests not a strict criteria to implement at this stage, but it adds a strong confluence. 4 hour balanced outcomes where the price was in the equilibrium premium or discount and key indicator area. Profitable trades not dependent not dependent on 4 hour EPD being achieved, or key indicator areas. In terms of these trades, there wasn't really a key correlation in terms of whether we were within that equilibrium premium or discount area, even though we were on the daily. A lot of these trades, green being winners, the red being the loser, weren't too strict on this criteria. So again, data suggests not a strict criteria to implement at the stage, but it does add a high probability to setups because the ones that played out really well from here, and I'm not going to go through them in too much detail. The ones that played out really well were at those 4 hour EPD levels. And then 1 hour ranges, and this is your resistance ranges, don't play a significant role in execution, but price did more often than not align with the 1 hour structure for that daily distribution. So again, data suggests not a strict criteria to implement. So this is where a lot of the changes have come into my plan, and I'll just take you through that now. So looking at the revised plan, we'll start from the right. So when price has mitigated EPD, first determine whether we are pro trend, counter trend, or range bound on the 4 hour. If we are range bound, I don't take a trade. If we are pro trend, meaning we've mitigated that area on the daily, and now the 4 hour is shifted in alignment with the daily, I then ask myself if I've identified an entry, is this entry counter trend or pro trend to the 4 hour trend? If it's pro trend, I can continue to the execution checklist. If it's counter trend, we then look for whether price is in a 4 hour or 1 hour key indicator area. That's a fair value gap or an order block. The key change here being I've now introduced 1 hour key indicator areas into where I look for entries as opposed to up here where we were just looking at the 4 hour. And then if we are, I can execute. If we aren't, then no trade. Similarly with counter trend trades, if we've mitigated the daily, but we are still pulling back deeper into premium or discount, I then ask myself, is my entry counter trend or pro trend? Counter trend meaning, are we obviously the 4 hours counter trend, is that entry then also counter trend? So basically in alignment with that 4 hour trend. If yes, we look for the same criteria as a pro trend 4 hour that's counter trend, because that's essentially the same kind of move. We counter trend to the daily. And if the trend on the 4 hour is counter trend, but my entry is pro trend with the daily, then I just ask myself, has price mitigated a daily or 4 hour order block? Because that essentially means that we're pulling deeper into daily or daily premium or discount, but then we have reached a significant indicator area order block. I was on the fence about adding a fair value gap here, but I won't for now because this is mainly a takeaway from the week. But it means 4 hour still counter trend. We haven't shifted yet, but the daily is in that EPD area. And so if we reach a daily order block or 4-hour order block, then I can proceed to execution, because that is a key sort of area that we normally see high time frame reversals out of. So that's kind of the intuition behind that. And then conversely, if price hasn't mitigated EPD, I then just determine whether we've established a trend towards that EPD. If we have, then price needs to be in that 4-hour, 1-hour key indicator area during the kill zone. If it isn't, no trade. If we have, then we proceed to execution. Coming to execution, there's one trade that or one criteria that's kind of just been taken out here, and that is the 1-hour resistance range sort of criteria. So again, ask myself, is price within London or New York kill zone? It is. Then I look at whether we're protracting before or during that kill zone open. If we aren't, then there's no trade. Protraction for me is key, because then that shows inducement prior to where price is going to distribute over that session. And then if we are protracting, I look for a key mitigation or time-based liquidity sweep with a reversal candle. Again, if you're on the back testing session, I was focusing mainly on order blocks as that sort of key criteria to enter. The data from this week's back testing suggests that uh, order block entries are not consistent with opportunities present. So some had, some weren't. And so it's not a restriction I'm putting on myself as yet. And then if we do get that confirmation, then I just look for minimum 1:2. But going into this week, I will be targeting my buy stop and sell stop areas instead of doing a fixed TP. This week I was doing mainly 1:2s, because from the previous back testing week, that's what I saw the market was responding well to. But now I'll essentially be targeting structure or those pockets of liquidity. And so, but it still needs to meet that minimum 1:2 risk to reward. If we don't, then there's no trade. If we do, then we execute. And so this is the plan that I'll be trading this coming week. And in I think it's in these next couple of weeks now, my back testing sessions in the week will be focused on this plan, with then the added lessons that I'm still learning from the ICT mentorship. So there's a shift now towards consistently back testing this plan and consistently looking for entries in that back testing as we get closer to the challenge. So let's see how it goes. Next week, I won't be releasing a review. I'm taking a weekend off because I'll be heading back home to Durban just for the weekend, to spend some time with family. It's my quote unquote mother-in-law's 50th. So looking forward to that. So I'll definitely provide an update for you guys in the following weeks. Well, we're still going to backtest this week, and then in the following backtesting session, I'll maybe do a quick review of how the previous week went. And then obviously not next week, the weekend after, we'll be back on the review with changes to the plan. So that's how we're looking. Don't forget, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.